Now let's talk about metals.
Gold just crossed $4,000 an ounce. The headlines are celebrating record highs, historic gains, but here's what they're not telling you. This isn't a sign of strength, it's a distress signal. And if you know how to read it, what you're looking at right now is the last clear warning before the financial system we've built our entire lives on changes forever. The last time we saw a parabolic move like this, 1971, right before President Nixon severed the dollar from gold and launched the biggest monetary experiment in human history.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
Before that, Weimar Germany, 1923, when people needed wheelbarrows of cash just to buy bread, when life savings evaporated overnight. This isn't random, this is a pattern, and it's happening again, right now, in slow motion, while most people aren't even watching. What you're about to see isn't just economics. It's the hidden architecture of power, the invisible forces that determine whether your money means something tomorrow or nothing at all. And the clock is ticking faster than anyone wants to admit. August 15th, 1971. President Nixon appears on television with an announcement that would reshape the entire global economy. He's cancelling the dollar's convertibility to gold, temporarily, he claims, to protect American prosperity. This wasn't temporary, it was permanent. For decades, the US dollar had been the world's reserve currency because it was backed by gold. Other countries could exchange their dollars for actual gold at $35 per ounce. That was the Bretton Woods Agreement. But by 1971, the US had printed so many dollars that foreign governments started getting nervous. France began demanding gold for their dollars. They were calling America's bluff. Nixon knew if everyone tried to convert at once, the vault would be empty. So he broke the promise. He closed the gold window. In that single moment, every major currency on earth became backed by nothing but a government's promise. No gold, no silver, no tangible anchor. Just faith. Faith in the US government. Faith in central banks. Faith that the people controlling the printing process wouldn't abuse that power. This was the birth of the modern fiat system. Money by decree. Money because the government says so. For 54 years, that faith mostly held. We built everything on it. Your salary, your savings, your retirement, the mortgage on your house. All of it floats on this ocean of faith-backed currency with no anchor to anything physical. Every dollar in your wallet is valuable only because everyone agrees it's valuable. It's a collective belief system held together by institutions and habits, and the fact that it's worked long enough that we've forgotten it could ever not work. But faith-based systems work until they don't, and when they break fast. Germany 1918, World War I has just ended. The Treaty of Versailles imposes crushing war reparations. The government faces an impossible choice: default on the debt or find a way to pay. They chose the printing press. At first it seemed manageable, a little inflation, but bills got paid. But inflation has momentum. Each round of printing makes the currency worth less, which means you need to print more to buy the same things, which makes it worth even less. Germany fell into the spiral. By 1922, prices were doubling every few days. By 1923, every few hours. Workers demanded to be paid twice daily so they could spend their wages before they became worthless. $1 could buy 1 trillion German marks. Think about what that does to a society. Life savings accumulated over decades, gone. People burned currency for heat because it was cheaper than buying firewood. Families who thought they were secure found themselves destitute overnight. But hyperinflation didn't just destroy wealth, it destroyed trust. It destroyed the social contract. It shattered the fundamental belief that hard work and savings would be rewarded. When money becomes meaningless, when the state can't provide basic stability, people look for radical alternatives. Extremist movements surged into the vacuum. The political chaos that followed would reshape Europe for decades. It all started with one decision: print money to solve a debt problem. Now look at where we are today. Here's what's actually happening right now in 2025. The people who create money are buying gold. Let that sink in. The very institutions that print and manage fiat currencies, the central banks that tell you paper money is sound and stable, are converting their reserves into physical gold at a record-breaking pace. China has increased its gold reserves for 11 consecutive months. Poland wants gold to represent 30% of their total reserves, calling it national security. India repatriated over 200 tons from the Bank of England. They want it home where they can physically control it. Turkey, Hungary, Serbia, dozens of nations followed the same playbook. 95% of central banks plan to expand their gold reserves this year. Not reduce, not hold steady, expand. These aren't speculators chasing trends. These aren't retail investors reading Reddit threads. These are the institutions at the center of the monetary system. The people with access to classified economic data. The people in rooms where the real conversations happen, away from cameras and public statements. The architects of the fiat system itself. And they're running for the exits. This is hypocrisy on a grand scale. Publicly, these central banks issue reassuring statements about strong currencies and stable systems, but privately, they're accumulating the one asset that exists outside the fiat system, the one asset that doesn't depend on anyone's promises. When the people who print the money stop trusting paper money, pay attention. Now, let me show you why they're scared. October 2025, US national debt, $38 trillion. In 2000, it was $5.5 trillion. In 25 years, nearly seven-fold growth. Over $10 trillion added since 2020 alone. But that's not even the real problem. The real crisis is the interest. The cost of simply servicing this debt, not paying it down, just keeping up with interest, now exceeds $1 trillion per year. More than the entire military budget. The interest has become one of the largest line items in the federal budget. Here's the death spiral. To pay that interest, the government must borrow more. That borrowing adds to the debt, which generates more interest, which requires more borrowing. A loop feeding on itself. There are only three ways out. Option 1, an economic boom so powerful we grow our way out. Tax revenues surge, the economy expands faster than the debt. Not happening. Growth is sluggish and we're adding debt faster than we're growing. Option 2, massive spending cuts and tax increases on a scale that would be political suicide. Slash entitlement programs, gut defense spending, raise taxes dramatically. No elected government will take that path. The backlash would be immediate and devastating. Option 3, devalue the currency. Let inflation erode the debt's real value. Pay back $38 trillion with dollars worth substantially less than when borrowed. This is the path of least resistance. It's politically feasible because most people don't understand what's happening until it's too late. Your purchasing power becomes the release valve. They will sacrifice what your paycheck buys to save the system. This isn't speculation. This is mathematical certainty. The sophisticated money sees it. That's why gold is exploding. Gold didn't jump from 3,500 to over 4,000 in 36 days because gold suddenly became more useful. The metal hasn't changed. Gold isn't going up. The dollar is going down. Every fiat currency is being measured against the one asset that can't be printed, can't be inflated, can't be politically manipulated. Gold is the measuring stick, and it's screaming that paper money is shrinking. This isn't speculation. This is institutions repositioning. When you see moves this dramatic, it's major players, sovereign wealth funds, family offices, all reaching the same conclusion at once. The math doesn't hold. The system can't hold. You now know what central bankers know. You see the patterns. The question isn't whether this ends. The question is whether you're prepared. When you buy stocks, you're buying a claim on future profits, denominated in currency. Bonds are promises to be repaid, denominated in currency. Cash is the currency itself. All these assets exist within the system. Their value depends on the system functioning. Gold is different. It's not a claim, not a promise. It's a physical asset that has held value across every civilization, every currency collapse for 5,000 years. From ancient Egypt to the Roman Empire, from medieval Europe to modern economies, gold has survived every monetary system mankind has created. No counterparty risk, no company needs to succeed, no government needs to keep promises. Gold exists independently of the system. Critics say gold pays no yields. That's its greatest strength. A bond's yield compensates for risk, default risk, currency collapse risk. Gold has no yield because it has no counterparty risk. It is the final settlement when promises break. The price past 4,000 isn't telling you it's too late, it's telling you it's urgent. Let me show you how this unfolds. Stage 1. Insiders move. Central bankers, officials, sovereign funds. They see problems first. They quietly buy gold. This happened. It's been happening for years. Stage 2. Institutions move. Banks, pension funds, insurance companies. They see the patterns. They notice what insiders are doing. They follow. Buying becomes visible. Prices move dramatically. This is where we are now. This is why gold jumped from 3,500 to over 4,000 in just over a month. Stage 3. The public moves. When your neighbor asks about gold, when it's all over the news, when panic sets in, by then you're paying crisis prices. We're in stage 2. The window is open, but closing. This isn't about getting rich. This isn't about speculation. This is recognizing we're at the end of a 54-year monetary experiment and the transition will revalue everything. The dollars you've saved, the salary you earn, the retirement you're counting on, all denominated in a currency that must be devalued to save the system. That's not opinion, that's arithmetic. You can't stop what's coming, but you can choose to hold assets that don't depend on the system's survival. That's what gold represents. Not an investment in the future, an exit from a structure failing in slow motion. Officials will keep saying everything's fine until it isn't. They have no choice. Admitting the system is broken would trigger the panic they're preventing. They'll maintain the narrative while quietly preparing. You have the same information now. You see the debt spiral. You see central banks buying gold. You know the pattern. The question is whether you'll act. 54 years ago, we severed money from reality and bet everything on faith. Faith that unlimited money printing wouldn't have consequences. That faith is breaking, the math is catching up, and gold's price is the market screaming that truth. This isn't about doom. Civilizations survive currency transitions, but the people who see it coming and prepare do much better than those who don't. History shows us this repeatedly. Those who held real assets during Weimar survived. Those who held paper marks did not. The building is already burning. Most people haven't noticed the smoke, but some have. The central banks have noticed. The sovereign wealth funds have noticed. The family offices managing generational wealth have noticed. The exits are marked. Some are moving toward them quietly, while there's still time. The warning has been sounded. The pattern is clear. The mathematics are unavoidable. Central banks are voting with their actions, not their words. And gold, the oldest store of value in human history, is telling you everything you need to know. History doesn't repeat, but it rhymes. And right now it's rhyming in a way that should make all of us pay very close attention. The choice is yours. Make it count.